Ladies and gentlemen, and good day, and welcome to the Canfin Homes Q2 FY24 earnings call, hosted by Investec Capital Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask a question after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitesh Jain. Thank you, and over to you, sir.
Thank you, Enzo. Good afternoon, everyone. Welcome to the Q2 FY24 earnings call of Canfin Homes Limited. To discuss the financial performance of Canfin Homes Limited and to address your queries, we have with us Mr. Suresh Iyer, MD and CEO, Mr. Ajay Kumar Singh, DMD, Mr. Apurv Agarwal, Chatterjee, CFO, Mr. B.M. Sudhakar, Business Head, Mr. Prashant Joshi of Canfin Homes Limited. I would now like to hand over the call to Mr. Suresh Iyer for his opening comments. Over to you, sir.
Yeah, good afternoon, everyone, and thank you for joining us for this earnings call. I welcome all of you to the second quarter presentation of the business performance of Canfin Homes. Just to give you a brief about the quarterly performance, I'll just take you through a couple of points before we open for questions. The presentation that we have prepared has already been uploaded. I'm sure all of you would have gone through it. But just to recap a couple of important points, first is on the disbursement front, that we have had a sequential growth in terms of disbursement. But in terms of comparison with the second quarter performance of last year, we've had a slight dip, and I guess we had already indicated post our Ambala incident that where a fraud had occurred in the month of July. That sentiment is a little low, and it might affect a little bit of disbursement because we are introducing a lot of steps and controls in the processes to strengthen the process and bring in a lot of internal controls. So that was one thing, but sequentially it is the disbursements have grown compared to the Q1 of the current year. The other thing is that in terms of the disbursements, we had indicated that Canfin would be looking at slight increase in the ticket size and looking at segments with the builder tie-ups and everything. So from that angle, the performance has been a little positive. We have started getting a good result, and the inquiry and logins have been quite positive. So in terms of disbursements, while the Q2 has been a little slow compared to what we would have expected, but going forward, we are quite positive that disbursements will pick up, and we should be able to cover up for some of the shortfall of the Q2 performance. In terms of the collections and recovery, the non-restructured book continues to have a very healthy GNPA, and it is in line with what has been there in the March as well as in the June results. The gross NPA, which was 0.55, has only marginally increased to 0.57, which is more of a seasonal impact as regards the non-restructured book. However, in terms of the restructured book, the NPA has been there, and as compared to what was initially expected that about 10% of the book would move into NPA from the restructured book, we have about a slightly higher 14% which has moved into the NPA in terms of the restructured book. So to cope up with this, the management has also made a slightly higher management overlay in terms of the provisioning. So an additional 17.28 crore management overlay has been made during the quarter, and as a result of this, the overall PCR has slightly improved, because from the 17 crore management overlay which was already made in the March of last year, there is an additional 17.28 crore management overlay totaling to 34.28 crores. So this has helped in improving the PCR, including the management overlay, to about 57%. Overall, the important thing that happened in the last quarter was the event at Ambala, wherein the fraud was there. Post the event, the initial disclosure was made to the stock exchanges regarding the event that has happened, and the amount of 38.53 was reported. Subsequently, the management has conducted an extensive study of this entire thing, not only at Ambala branch but across all the branches. And it is confirmed once again that it is purely a one-off incident in one of the branches at Ambala, and it is not found in any other branches. The final amount also in respect of this fraud has been crystallized at 39.67 net amount, and for that the management has made 100% provision in the current quarter. So that is there. So because of this, the total provision which has been made during the current quarter is to the tune of 72 crores, which is inclusive of the 39.67 crore for the Ambala incident and the 17.28 crore management overlay that has been done over and above the regular provisions that are required as per the ECL. In terms of the spread and the NIMs, there has been an improvement in both the spread and NIM during the quarter, mainly because of the portfolio which has come out of, which has had the last rate hike which was passed on. So at the beginning of the quarter, there was a 12,500 crore approximate portfolio where one rate hike was yet to be passed on. During the second quarter of the year, around 5,700 crores of book has gone through this or experienced this rate hike, which leaves another 6,000 odd crores wherein this rate hike is yet to be passed on. So totally we have, the spread because of this rate hike, the spread has improved, and so also has the NIM. So NIM as at the end of the second quarter stands at 3.62%. Going forward, in terms of disbursement, we are confident that the logins and inquiries have been good, so we would be able to catch up a little bit in terms of the shortfall of the second quarter. And compared to the target, we would at least be crossing 10,000 crores in terms of disbursement during the entire year. The loan book growth, because of this shortfall in disbursement during the second quarter, has slightly come down to 16%, but we are hopeful that we should be able to pick up in the second half, which normally is also the the better half in terms of the disbursements for the housing industry. To push that disbursement, we have also for this festive season announced a small scheme for the new customers at a slightly lower rate of interest also. So we are hopeful that business should pick up and we will be able to improve the disbursements. And we continue to have maintain the guidance of spread of 2.5% for the entire year and 3.5% for the in terms of NIM for the entire year. So that's in a nutshell the performance of for the quarter, and the detailed presentation is already shared and put up on the website as well as on the stock exchanges. So I guess we can now open for questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Oberoi from Yes Securities. Please go ahead.
Yeah, sir. Hi, this is Rajiv here. Thank you for taking my question and congrats on good numbers. So, sir, the first question is on
Mr. Manoj Oberoi?
Yeah. Can you hear me?
Can you hear me, sir?
Yes.
Mr. Oberoi, can you hear me?
Can you hear me? Hello?
As the current participant is not answering, we will move on to the next question. That is from the line of Shripal Doshi from Equarius. Please go ahead.
Hi, thank you, sir. Thank you for giving me the opportunity. And congrats on a good set of numbers. And, sir, must appreciate the details in the presentation. A very detailed presentation. So my first... Hello?
I guess... is there a problem on the other side or something that we're not able to hear anything?
Sir, I am checking that. Just give me a minute, please.
Hello?
Yeah.
Hello.
Yeah,
is this Mr. Shripal Doshi?
Yeah, I can. Can you hear me?
Yes, we can hear you. Please go ahead, Shripal.
Sure. Thank you, sir. Thank you for giving me the opportunity. And, sir, congrats on good set of numbers. And wanted to appreciate for the detailed presentation. So the first question was pertaining to the yields. So while, as you explained, that the repricing has benefited us on the wheel side, and incrementally there's 6,000 crore of portfolio which will get repriced for 35 basis point of rate hike, the last one that you had taken. So is there anything additional other than that is benefiting us on the yield side? What also wanted to understand our incremental lending rate that we have.
The 2 points that you mentioned, one is the rate hike that was passed on. Obviously, in the first quarter, we didn't get much of a benefit of the rate hike because, whatever was passed on, at the beginning of the year, we had about 18,000 crores. And at the end of the first quarter, we had 12,500 crores. So about 5,500 crores, which came for a reset during the first quarter of the year, was for a part of the quarter only. So we didn't get the full impact. But in the second quarter, that entire 5,500 crores, we have got the 100% benefit. For the entire 3 months, we have got the benefit. So that is the main reason. Same way, going forward also, the portfolio which has come for a reset in the second quarter, we have only got part of the benefit has come to our books because some of it would have come in the month of July, some in the month of August, and some in the month of September. So on that, the entire 3 months next quarter we will get. So that is the main reason. And second reason is the incremental lending rate obviously has slightly gone up because Q1, Q2 normally the discounts that are offered for the festive season are generally pulled out. So same in our case also, we had done that. But that was also there for the first quarter. So that wouldn't make much of an impact in Q2. But so the main reason has only been the rate hike that has been passed down, where we have got the full impact of 5,500 crores during this current quarter. Second question as regards the lending rate. So our lending rates, we have, I think we have not made any change in the lending rate during the quarter except for a higher ticket size because we were to enter into the APF segment. For the higher ticket size of loans, about 35 lakhs, where the credit score is above a particular cutoff, we have offered a slight discount in the lending rate and we have lowered our card rate for those kind of customers. So that is now below 9%, whereas for the rest of the customers, it is start from 9.6%.
Okay. So just second question was on the GNPA front. So we've seen an increase in our numbers. While I understand some bit would be from the event that happened during the last quarter, and some bit would be from the slippages from the restructured book, as you highlighted. But I suppose there is still a portion of our restructured book which will be coming out of moratorium because you had highlighted that in August, majority of it will come out, and by November, all of it will be out. So how do you see the GNPA moving from here on, and was there any other big slippage during the quarter?
First of all, there is no impact in the GNPA because of the Ambala fraud because first of all, it is not an asset-related fraud. So there is no bearing. It was purely, money which was siphoned off, and there was no asset to back it up. So it is not an asset-related fraud. That is not part of the 33,300 odd crores that is reflected in the asset book. Okay. So this entire thing, if you look at the page 30 of our presentation, you would see that the major reason for the rise in the gross NPA is because of the restructured book where we've had a 64 crore portfolio turning into NPA. Now, this 64.18 crores, which has become an NPA from the restructured book, is out of the 450 crores of restructured book, which have come out of restructuring up to June. So, basically, we had a total book of 685 crores, which was wherein restructuring was offered, out of which 460 crores has already come out of restructuring up to June 2023. And out of that, 64 crore has moved into NPA, which is about 14%. And we still have out of this thing about 210 crore of book which is yet to now come out of restructuring in the coming month. That is in the Q2 of the current year as well as the month of October and November. So out of this 210 crores, if you look at the same percentage, there could be some increase in the coming quarters in terms of the gross NPA. But having said that, I would also like to say that during the last quarter, we also had some recoveries from the regular accounts. So the entire impact will not be felt in the coming quarters. But that should probably be the last of the NPA because in terms of the restructured book, the gross NPA levels have almost been the same at 0.55, has just marginally increased to 0.57, which is also a seasonal impact. So that also by March should come down back to the, I guess, 0.55 or something.
Got it, sir. Got it. Thank you, sir. Thank you so much for answering my questions. I'll come in the queue if I have more questions.
Yeah, thank you.
Thank you. The next question is from the line of Manoj Oberoi from Yes Securities. Please go ahead.
Yeah, sir. Hi, this is Rajiv. Can you hear me now?
Yes, Rajiv. We can hear you. Go ahead.
Yeah. So the first question is on business and disbursement. So, sir, are all the operational changes complete as we speak? And would the branches take some time to attune to them? Anything on that if you can highlight?
Sure. So we have mentioned in page 33 of our presentation the action taken, wherein most of the changes that we had indicated, that is centralized disbursement as well as centralized reconciliation and strengthening of the credit sanctioning, which is the credit risk monitoring department CRM, and a few other smaller things, but mainly these three have already been implemented. So the centralized disbursement we have been doing for the last, from the 3rd of October actually, and it has been going quite well. There is no kind of issue or anything that is being faced. In terms of the centralized reconciliation also, it is completely something which doesn't affect the branch operation, so that is also not going to have any impact. Same also the case for CRM. So the impact in terms of the business would not be as much. It is only that while we were doing this, we were implementing this, there was a lot of changes in the systems and clarifications and trainings and all that had to be done, which had an impact in terms of the business. So that having been done and this process is being implemented, at least in the respect of these cases, will not impact much. However, we do have a couple of other things which are planned, which is given in page 34 of our presentation. But I guess it would not have much of an impact going forward, because those are the smaller things which will not have an impact in terms of the TAT or in terms of the servicing of the customers at the branches. So going forward, I guess it should not impact much in terms of the disbursement, because all the trainings and everything that was required was mainly for the central disbursement, which has already been completed.
And sir, any spike in branch attrition in recent months?
Sorry, branch?
Attrition in recent months?
No, we have not seen any attrition. I mean, it's the regular course that is there, not much. There is no any difference in terms of attrition.
Okay. Sir, the second question is on cost of fund. The cost of fund was flat Q on Q. So if you can spell out the sequential movement in borrowing rates from banks and NCDs, just to understand why the cost was flat on Q on Q basis.
See, mainly, if I have to tell you, it's not that it's all the aspects of the borrowings have remained flat. So there have been a couple of MCLR-linked bank term loans, wherein we've had a small increase. However, on the other side, there have been the commercial paper that we borrowed, that we raised, were at a slightly lower rate. So overall, if you look at it, the impact has been kind of set off within each other. So while there was some about a couple of MCA, so since the repo rate loans that have been raised, which is the majority of the bank borrowings that we have, since there is no change in the external benchmark, that is the repo rate, hence there is no change in those loans. But couple of our bank borrowings are linked to MCLR or T-bill. So there, it's a fluctuation linked to the MCLR or the T-bill. And that has been offset by the CP. Same way, if you look at it, the last year we had raised NCDs at a higher rate, because we had raised it in the month of February, where the rates had kind of started going up already. This year, the rates that we are getting are a little on the lower side, although we have not raised any single rupee from the NCD route this year. So I guess, in terms of the cost, there could be a couple of other MCLR rate loans which are there, which if the MCLRs go up, could go up. So otherwise, we don't see much of an impact. If you look at it, our borrowing from NHB has come down during the year, because we had already exhausted all our NHB sanction limits in the month of December 2022 itself. And for the current year, we are yet to receive the fresh sanction from NHB, which normally comes in the month of October, November. Last year also it had come in October only. So once that comes, whatever little increase there is there, probably we can offset from a raise when we raise the NHB refinance, because that is one of the cheapest borrowing avenues for us as of the moment.
Yeah, got it, sir. Thank you so much, and best of luck.
Yeah. Thank you.
Thank you. The next question is from the line of Nishant from MLP. Please go ahead.
Yeah, hi, sir. Am I audible?
Yeah, Nishant, you're audible. Please go ahead.
Yeah. Hi. Yeah, thanks for taking my question. So, my question was around like growth and possible balance transfers out. So we've passed on a lot of like yield hikes onto customers. Like we've had like a very smart and sharp kind of NIM expansion on this. How should I think about growth? Like, do you fear this starts to impact prepayment rates and people BT out? Like festive season, people typically have like those processing fee waivers or stamp duty waivers or all that kind of stuff. So how are you thinking about that? Is there a potential for the yields to be kind of negotiated down by customers to kind of preserve growth? And secondly, just if you could talk about, like, say, from a 3-year perspective, what kind of growth ambitions do you have?
Sure. First question, Nishant, is about your is the prepayment risk or whether there has been any spike. So actually speaking, compared to the first quarter and the second quarter, the actual absolute value of prepayments plus amortization during the quarter has been higher by about 100 crores, which is not a very large amount. Although it is witnessed about 100 crores. Some of it obviously is also because the base itself has gone up over the quarters. But there has been a slight increase in this thing. Now, going forward, with the festive season coming, as you rightly pointed out, a lot of players would be coming in with very good offers for at lower rates and all those things. But we have also, as I had mentioned earlier, also slightly offered a good rate for some of the customers. And if required, we will also look at offering a good rate to retain good customers. So that will obviously be the thing, and that's why in the beginning itself, while our present NIM is around 3.62 and our spread is also higher at 2.6, but still, as I mentioned that, we would be comfortable with a 2.5 and a 3.5 number for the entire year, because if required, we will not hesitate to, offer a good rate to retain good customers.
Sure. Understood. And could you talk about growth as well? And you also alluded to like higher ticket segments.
What is the outlook for the next 3 years or something? So current year first, in the short term, if I have to mention, I would say, as I mentioned earlier, that whatever shortfall is there in the second quarter, we would probably look at, offsetting some of it in the Q3 and Q4. And we have a good spread and margin, and we've had a pleasant surprise in terms of the spread and NIMs. So we would not hesitate. We are now a little more comfortable in offering a good rate to push growth. And that was what has been our indication from the beginning, that if we have that buffer, we will definitely use it to push growth. So we will try to do that and cover up for some of the shortfall of the Q2 performance in the Q3 and Q4. Having said that, for the next 3 years, if you look at it, our growth targets would be somewhere around 20% disbursement growth year on year. That would be the kind of target that we would be comfortable with.
Sure. Yep, that's it from me. Thank you so much. And all the best.
Thanks. Thank you. Thank you.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Yeah, hi sir. Thank you for taking my question. And firstly, highly appreciate the improved disclosure on the presentation. So just clarification on the restructured numbers. So you said 460 crores came out as of June 23, and 210 crores is more pending.
Yes, I'll just explain. So we have about 680 crores of book, which is wherein the restructuring has been there. 450 crores had come out of restructuring up to the month of June. Okay? And during the month of July, August, September also, we've had 216 crores which has come out of restructuring. However, for the purpose of calculating the NPA, we have taken that portfolio with a 1 quarter lag. Because, if the portfolio has come out in the month of August, then even if the customer has not paid a single amount, it will not be classified as an NPA in the month of September. So for the purpose of clarity and for the purpose of, having a, fair representation, we have taken the base or the portfolio which has come out of restructuring up to June and the NPA as on September. That's why NPA of 64.18 crore on 460 crore. But if you ask me really how much portfolio has come out of restructuring, then it is 613.66 crore.
Yeah, so technically entire portfolio has come out. It's just that the 90-day DPD for this 210 or 216 crores is pending, right?
No, 63.20 crores is yet to come out of restructuring, which is in the months of October and November. And together this, 676 minus 460, that is about 216 crore, is what is not yet closed, has not crossed the 90 days, so is likely to have some impact in the NPA going forward.
Okay. Got it. That was very helpful. Thank you.
Yeah, thank you.
Thank you so much. The next question is from the line of Rohan Advent from Pratt Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity. So my first question is that on the restructured book, we had a provision of 68 crores. And now in this quarter, we've done a management overlay of 17 crores. So we have, say, an 85 crores provision. Are you confident that, this provision would be sufficient for all expected slippages from the restructured book going forward as well?
In fact, I would say that, this would be more than sufficient. I'll tell you why. One, because we, of course, have that 68 crore, which was the mandatory provision required when the accounts were given or offered a restructuring, 10% of the book. So that's why the 68 crore originally is already available with us. Over and above that, whatever 64 crore portfolio has moved into NPA, we have already provided under the normal ECL guidelines. So whatever provision is required as per the ECL, which is for the stage 3 assets, that has already been computed and provided in the normal ECL calculation. Over and above that, we have the 17 crore provided as a management overlay in March, plus the 17.28 provided in this quarter. So that is another 34.28 crores. And additionally, as a very prudent measure, the entire NPA book of restructured pool, that is another 613 crores, which you would see in our page 27 of presentation, is being considered as stage 2, even if they are in stage 1 or stage 2, or if they have not even come out of restructuring. So even in that count, we have provided on the higher side, considering them at stage 2, even if they are in stage 1 or they are in regular category. So there has been prudence in terms of provisioning for restructured book on multiple 3 or 4 counts. So in going forward for the restructured book, we don't expect or foresee any kind of additional requirement that may come.
Got it.
As I said, the final thing will emerge in the month of March, because the final last leg of this thing is also expected to come out in the month of November. So in Q4 is when they will cross 90 days. So by March the complete picture will be available, and post that we can take a call on how much to maintain and how much of this management overlay is available to us.
Got it.
Having said that, if you look at our page 29 of our presentation, we would like our ECL provision requirement itself is only 44%. So the PCR is less. So as a conservative management, we would definitely prefer to have a slightly better PCR. So, to that extent, whatever possible, we may continue, even if, it is not going to affect as a restructuring, but we may still continue because it's, we would like to have a slightly better PCR.
Got it. Sir, and my second question is that in your opening remarks, you said that for this year you are targeting disbursement of 10,000 crores. In the first half, we've done 4,000 crores. So that leaves us with a run rate of 3,000 crores per quarter for the second half. Are you seeing that kind of traction? For a few quarters now, we seem to be around at 2,000 crores and have unable to really, step up that. Also, what I understood from your presentation is that you're trying to diversify your sourcing away from DSAs. So would that have some additional growth pressure? So your confidence on the 10,000 crore disbursement and the traction you are seeing, if you could share that, it would be useful. Thank you.
Sure, certainly. See, when we say that we want to, slightly reduce the reliance on DSA, it is not that we want to reduce the absolute amount or sourcing from the DSA. having, it was practically a single sourcing channel which was available to the company. So we are just trying to kind of spread and have an additional sourcing channel, which is through this builder tie-ups and APF and through this digital sourcing. Okay, so whatever was coming from the DSA pool will continue. We will still have to, that also you will see that, in terms of the numbers also, we have not seen much of a reduction or a change in terms of the sourcing from the DSA channel. That is also part of our presentation. So what we will do is this APF sourcing and as well as this digital that we are looking at will only add to the kind of sourcing that we are looking to have.
And are you seeing traction for the 3,000 crores in terms of the pipeline, the inquiry?
Yes, we are having a good, increase. In fact, this APF that we had started somewhere in the month of July and July and all, we are getting a good response. And what has happened is, our absolute business from the 25 to 50 and above 50 lakh segment has started moving up. Though it's not a very large number to talk about, but at least the numbers have started to show, and we are hopeful that this will also help us, because not only will the business come from that segment and the APF channel, but that whatever business we get will also be with a slightly higher ticket size, because that 25 to 50 and 50 plus will be higher than the current average ticket size that we are having of 22 lakhs for HL and 8 lakhs for NHL.
Thank you and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Onkar Gugardare from Shree Investments.
Hello.
Please go ahead, sir.
Yeah, my question was regarding the 46 crore NPAs which you talked about. Can we see this kind of run rate also going forward, or you think they will be moderating in the upcoming quarters?
46 I didn't get. I guess you're talking about the portfolio of restructured, which is 64 crores. Right? Yeah.
Yes,
so
yes.
64 crore, as I said, is mainly because of the restructured pool of 450 crores, which has 460 crores, which has already come out of restructuring. So that's about almost 65% of the restructured book has already come out of it. The balance is only 210 crores. So going forward, it will definitely not be as high. And even as I said, even if you consider the same percentage, which is 14%, then the numbers will be less than half of what we have already seen already. So 64 crores, maybe another 30 crores is what we can see, but not beyond that.
Okay. Another question is on the growth fund. You mentioned around 20% growth we're targeting for the next 3 years. What kind of AUM growth we can look forward in that? And around the NIM margin also?
We would be comfortable with a spread and NIM of 2.5% and 3.5% respectively. And in terms of the AUM growth, if we do about 20% disbursement growth, considering the present level of prepayments, amortization and everything, we should be around 18% kind of growth in terms of AUM growth for the next 2 to 3 years.
Okay, and this NIM percent and yield you mentioned for the upcoming quarters, or this is for the long term you are maintaining this 2.5 and 3.5?
In the long term, we would be comfortable with about 2.5% spread. I think as this thing, 2.5% spread is something which is comfortable to work with, considering that net after all our expenses, after all our costs and credit costs and our OPEX and everything, we'll still be able to maintain a 2% plus kind of ROA.
Okay, and what kind of gearing you will be comfortable at?
Currently, our gearing is below 8 times, and we would be comfortable and we would not want to go beyond 8 times.
So that leaves you for capital, right?
8 times gearing to ROA would be about 18% growth from internal accruals. Yes.
Okay, so any plans to tap the capital markets for this upcoming growth you are talking about?
No, up to 18% if it is there, we will be able to meet from the internal accruals.
Okay.
But yes, if it is a good year, if the growth picks up, if some new scheme is announced by the government, or any such thing which, pushes the demand, then definitely we will have to look at capital if it goes beyond 18%. Presently, as the rating agencies, ICRA, CRISIL and all have mentioned about 14 to 16% expected growth rate for the industry in the current year. So tomorrow, if overall, there is a good kind of incentives provided or something or some new scheme launch, then in that case, it is possible that growth rates might pick up, in which case we may have to look at something, because gearing beyond 8 would not be prudent or would not be, very comfortable even from the rating agencies or anything.
Okay. All right. Thank you very much.
Thank you. The next question is from the line of Shweta Daptardar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity, and congrats on good set of numbers. So my question again pertains to the growth numbers. So two apprehensions that I have. One is the actions which we have taken on the operating systems front, wherein we have mentioned that the disbursements have been centralized. So now that the disbursement or the decision-making authority has been sort of removed at the branch level, does it impact the incremental growth? Point number one. And point number two, so you just mentioned that the 6,000 odd kind of run rate is very much plausible on disbursements in second half, given the maintenance of current repayment rate. But if I look at the scenario wherein BT cases have been slightly on the higher side, and given that, you are almost doubling the disbursements from the current odd levels, and if I assume current repayment scenario, then the growth is sort of, the final AUM growth is sort of not conjecture which I am getting is, it's not getting closer to 18% plus. So could you just clarify the math? Thank you.
Yeah, sure. So first is regarding whether the growth of 6,000 crore would be possible or not. Disbursement of 6,000 in the 2 quarters. If you look at it in the previous year also, we have touched somewhere around 2,500 crore in terms of the disbursement in a particular quarter, and we would have probably touched somewhere closer in this current quarter also had this additional impact not happened. So now coming to the impact of this centralization of disbursement, actually it is not that the power or the disbursements have been completely withdrawn from the branches. The branches only schedule the disbursements. The branches are only assessing the cases, and sanctioning is also decentralized as it was done in the past. Only thing is, because the check signing powers are also decentralized, and we wanted to withdraw that and add an additional control point. That is why we have added another maker-checker concept at the head office, wherein certain documents are verified and end-use confirmation and everything is taken. So basically what we have done is, on a day there is a cutoff of 12 o'clock, wherein the branches have to feed in all the disbursements like they have normally been doing. There is an additional check-in which happens at the head office, post which the disbursement requests are sent to the bank, Canara Bank, and DDs are collected in the evening around 4 and 5 o'clock. So instead of having a full day available where anytime they could do a disbursement, it is only a matter of planning where the branches have to ensure that by 12 o'clock they are able to schedule the disbursements. If it doesn't happen, then it will happen on the next day. So it's not going to add to any kind of an operational issue or increase in TAT which will affect the business. Okay. So one is as regards the business of 6,000 crores, we have done 2,500, so a little bit of push to make it 3,000 would not be, too far-fetched, I feel. Second thing is, we have also planned some additional branches for this year. We have already opened 3 branches in the second quarter, and we are already in the pipeline another 9 branches where, we are at a stage of negotiation for the property or recruitment is pending and all. So that also will help in terms of the adding to the growth. And the third point is, the ticket size, as I had mentioned earlier, that this slight increase in the 25 to 50 and 50 plus segment that we are seeing, that will help us in improving the ticket size also. So that is the 3 points which are there. And of course, with the buffer that we are having in terms of the rate hike, which will help us in the spread, we have an opportunity to offer good rates to get the market. That's another thing why the growth should happen. Now, the other point that you mentioned about prepayments, so as I mentioned earlier, between the first quarter and the second quarter, the absolute increase in the prepayment and amortization only to the tune of 100 crores, which is about 30 crores a month, which is not a very large amount considering that we have 200 branches. 208 branches to be precise. So it's not that, there is a very large run on in terms of disbursement or any major kind of a thing. During the entire quarter, Q2 compared to Q1, there is an increase in terms of prepayment to the extent of 100 crores put together, 3 months. So I hope I have answered, all the points.
Yes, sir. That explains. Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, can I, for the 450 crores which has already come out of restructuring before June, are we confident that this 64 crores of GNPA is enough, or do we think anything further might come out of that book itself?
I don't think there is, in the normal course, some slippages here and there would happen, but again, there would be a total, some payments also coming, recoveries also happening. So I don't think there is much of an impact, too much of a higher impact that is likely. We are confident we should be able to do it. Recovery efforts are there. We are also, pushing further, adding, maybe we will add some more staff and all, because, we had anticipated about 10. It is slightly higher than that. So we are, adding resources on the recovery front and all. So I am quite confident we should not see any major spike in that.
Okay. So basically 64 crores from 450 crores, and additionally, if anything comes from 210 crores that has come out of the book, right?
That will come out of the, yeah.
Okay. And what do you expect once this restructuring book is done and over with, what should be the normalized credit cost going forward?
Credit cost in terms of ECL provisioning and all, that's a different issue. That is a normal thing. We have a, stage 3 provisioning of 0.42. That's in the normal course will continue. Credit cost in terms of actual write-off or anything of that sort, I think a 10 bips is more than enough, because traditionally it has never been beyond that. It is, in fact, not even 7 bips actually. So I think 10 bips in terms of the credit cost for write-offs and all those things put together should be good enough.
Okay. And one last thing, sir. When I saw your presentation, if I'm right, there was a decrease in standard asset provisioning, 14 crores to 7 crores. What would that actually mean?
Actually, in the beginning of the year, whatever we had in terms of our stage 1 assets, we've had a lot of the absolute value of 0 to 30 bucket has actually come down. Okay, and with more of a portfolio now moving into regular payments and all, in fact, in the ECL model, this percentage itself is the 5-year analysis that has been done of the actual track, because the ECL works on a pure scientific model where 5-year repayment analysis is carried out, and then the probability of default and this is evaluated. So based on that, the portfolio is reflecting that. So the main effort was we tried to also pull down in terms of the overall amount which was in SMA 0, SMA 1 and SMA 2. So that has also brought in results. Our overall portfolio which is in the SMA 0, 1 and 2 has come down. Even net of the amount which has moved into NPA.
Okay, sir, got it. Thank you.
Thank you.
Thank you. The next question is from the line of Nischint Chawathe from Kotak Institutional Equities. Please go ahead.
Hi. Thanks for taking my question, but just one or two clarifications. You will still have around 280 odd crores of loans which come out of restructuring, or which have probably come out of restructuring, but we don't know if they are standard or NPA. And I think against that, what you mentioned is that you have around 38 crores of overlay and around 68 crores of provisions on restructured loans.
Correct.
Is my reading right? So all this around 100 odd crores is available for this 300 odd crores of loans, which we'll have to see whether, how much of it can turn back.
Yes, but again, it is while it is for the restructured book, as I had also mentioned, it is also because our PCR is only 44% in terms of stage 44% in case of stage 3 assets. Okay, so part of it we would like to also retain, or we would also like to maintain to have a slightly better PCR. So it is not that it is the entire additional management overlay or whatever is being carried is because of in the restructured book only. Some of it is also because of we would like to slightly have a better PCR.
No, but in that sense, it is fair to say that if the slippage rate from restructured book is similar for the balance 300 odd crores, then you may not require another management overlay. I think, is that a fair assumption?
That is a fair assumption. In fact, by March, we would have a complete fair picture, and we would probably have some excess which we can write back. But as I said, we may not, because we would like to still maintain a healthy PCR. But in terms of the portfolio, the way we are looking at it, yes, this available management overlay should be more than good enough to handle the additional provisioning under ECL.
And just one clarification, I know you started off with this, that, disbursements were a little weak this quarter. I didn't quite follow the reason for this.
See, we had this incident in the month of, July, where this fraud had happened. So obviously after that we tightened a lot of things. Even in terms of the sentiment, there was a little bit of impact. And we have tightened certain processes and additional checking, and we had this entire exercise which was carried out to ascertain whether the same thing is happening in any other branches. So there was an additional reconciliation, additional visits carried out, and then we had the centralized disbursement. So we also had an extensive round of training which was conducted across for all the branches. So all those things have been additional things which have impacted our the business. Basically, it is just that there were too many other diversions as well. So that is the main reason. That is why I would say the main cause for this.
I think 2-3 quarters back you had called out some sort of a weakness in higher tickets. So would you sort of say that from a demand point of view, things are sort of there is no issue at all and things are back on track? Or would you still say that there may be some pockets where there is a little weakness?
I didn't get your question. You're saying in the higher ticket size, what is the point?
No, so
sorry.
My question essentially is on the demand side. Do you see weakness in any pockets? At this point of time.
See, not in the segment as I mentioned earlier. This 25 to 50 and above 50, we are actually seeing increase or improvement in terms of the business as well. And this particular ticket size, we are not seeing any kind of slowdown or anything. Yes, to some extent, affordable might be a little slow because post CLSS withdrawal, there could be something. But in the 25 lakh plus, basically, I would say not even 25 lakh plus, basically the 2 BHK and 3 BHK and that kind of a segment, which is the mid-size, and definitely there is a good demand. So there is, I don't think there is any slackness in that particular segment. Not at least not in any of the markets that we are operating in.
Perfect. That answers my question. Thank you very much and all the best.
Thank you.
Thank you. The next question is from the line of Anusha from Dalal and Broacha. Please go ahead.
Thanks for taking my question. So I just want to understand what is average ticket size currently?
For the Q1 as well as Q2, our average ticket size for HL was around 22 lakhs and for NHL was around 8 lakhs.
Okay, and for the entire book, if we have to take it?
For the entire book, we'll have to work out. I'll probably come back or we'll put it somewhere. But right now, it is we'll take that.
So I just want to understand, incrementally you said that in the average ticket size you're looking at 25 to 50 lakhs bucket and 50 lakhs plus. So going forward, say over the next 2 years, how do we see this high ticket size segment share in the overall loan book? Because I also want to understand the related competition in the higher ticket size is higher, from the banks and other NBFCs. So how you would like to, grow in this at 22 lakhs, which, the ticket size that you had, and plus on the higher end side. So what is the share that we might look at it, say, over the next 2 years' time?
We have indicated that, while I don't have the kind of breakup, how much of it would go into the kind of more than 50 lakh segment, but definitely, we are looking at the ticket size moving up to from the present 22 lakhs in the HL segment to around 27 to 30 lakhs in the next 3 years or something. So this would mainly come because we would be pushing for the business in the 25 lakh plus segment also. Now, competition obviously is there, and, when we were in this lower segment, there was also a segment that, now the bigger players are also open to come to the lower segment. So, that way the competition is always going to be there. So we'll have to find our space within that, 25 lakh plus segment as well. And with this APF, what happens is it is not only a matter of a loan amount which matters, it's also a matter of segment, it also matters the customer profile, it also is a function of, the local presence that we may be having in certain pockets. So all those will contribute. So it is not that we need to have a very sizable chunk of the market to be able to do it. Looking to our size, even if we get a small, 2 to 5% kind of customers in the bigger ticket size, 25 lakh plus in projects that we are approving, we should be able to get a good sizable amount of business from that. Because we had like we have started this APF, we are looking at about 350 to 400 projects to be approved during the year. Now, if 350 to 400 projects are there and we are able to get 2 to 5% of the business from those projects also, I think that should also add up to quite a bit of the business.
Okay. And so on the margin side, if I just look for the Q1 margins, they were around 3.5% plus. Q2, it was 3.8%. And you said that going forward in H2, there is 6,500 worth of book is yet to get repriced with 35 basis points, the rate hike that you had done. So, in my opinion, I think the trajectory should be, definitely should be much higher than the blended for the FY2024 should be much more higher than 3.5. Then the guidance is actually much lower that you have been, putting it out. So that is purely because the yields on this incremental basis are lower. That is the precisely reason that you are aiming for lower margins.
No, as I mentioned earlier also that yes, there is a buffer available, and in this quarter itself we are present. It's been a good healthy growth in the NIMs and spreads. So definitely, as indicated earlier, we would this will give us a lot more comfort to offer better rates to attract customers in the 25 lakh plus segment. So we would be, that's why, we would be open to kind of compromise on the spread up to 3.5%, NIMs up to 3.5% so that we can get some growth. That's why we continue to have a 3.5% kind of guidance in terms of NIM.
Okay. And I missed on to your credit cost, guidance that you mentioned. So what was that number for the FY24?
10 bips for the credit cost. Not the ECL provisions, but in terms of the credit cost, absolute losses and all those things, not more than 10 bips.
Okay, so this will be, so on a normalized basis, that's a run rate that we should look at.
Correct. That is right.
Okay. And just one last thing on the OPEX side, I think you had said that you will be opening closer to around 15 odd branches, and I think the 9 more are yet to open. So do we assume that OPEX cost, should be higher in the second half?
To some extent, yes, they would be higher. You are right, there would be slightly higher, although this would not be the main reason. But along with this, there will be a little bit of additional staffing that we have projected, which will be joining. We also have, this IT transformation, which will also have a little bit of a cost. So, the small IT interventions and all those things that we are doing. So all those would have a cumulative impact. And yes, we had indicated that by the end of the year, we can probably look at somewhere in the range of about 18% cost to income ratio.
Okay. So last thing on this, putting all this, things together, how do you see ROA, for the current fiscal?
See, this quarter, of course, because of this, exceptional item of provisioning for this Ambala incident. But other than that, we are confident, ROA of 2 we should be able to maintain an ROA of 2. In fact, we have given that by excluding that event, our ROA would have been 2.21% in this quarter.
Okay,
excluding this event. But because of this one-time event, it is 2.01. Otherwise, if this one-time provisioning had not happened, it would have been 2.21.
Okay. Okay, sir. Got it. Thanks.
Thank you. The next question is from the line of Bhuvnesh Garg from Investec Capital. Please go ahead.
Yeah. Hello, sir. Thank you for the opportunity. Sir, I have a question regarding the RBI guidelines on change in EMI or increase in tenure, the guidelines which they issued in August. We just want to understand the impact of it, like how we used to do it earlier and what has changed after the guidelines. Yeah, that's my first question.
Okay. Now, actually, there are 2 guidelines which the RBI has come out with. The one that you mentioned about the variable rate and the customers having an option or a particular number of times they can move from a fixed to floating or floating to fixed. Okay, that is one particular guideline. That may not have too much of an impact because it is more of a transparency and giving a customer an option. And we are already having, an option where customers we are already having a reset clause where, every time the rate changes, there is the card rate, and the card rate, the customers at the time of the reset are put back into the card rate depending on the kind of credit scoring or the credit band in which they are falling. So that is already being there. So the customers don't even have to ask for it. So in terms of that, we may not have much of an impact, except that we don't have a fixed rate loan, which we may have to offer. But, looking to the trend of the customers, there is not much of a demand for a fixed rate loan. Most of the customers are comfortable, and in the last about since 2003 to 2023, there have been 20 years the customers are now completely used to fluctuations. There have been upward movements as well as downward movements, and so customers may not have so much of a request for fixed rate loans. And this particular request or this guideline has also come mainly because for the first time in the history of so many years, there has been such a sharp rise in the interest rates in the market in such a short period of time. So, we don't expect that it will have much of an impact. However, since you raised the point of a RBI guideline, there is another guideline from the RBI for all lending institutions, including banks, wherein the penal interest rates you cannot compound, and they cannot be in the nature of a percentage. It has to be on an absolute value, and it cannot be compounded. That is something which will have a larger impact for all the players, but that will be something which will impact everybody. So I think that is what we'll have to see. But that is not yet implemented, that we still have time.
Okay, sir. Would you be able to quantify that, how much that impact of penal interest would be there?
No, not right now. But we have evaluated. We don't have too many instances where actually it is going in the nature of a penal interest. Mostly it is the nature of the penal charges. But yes, compounding impact, we'll have to see how much of it is there and how to handle it. But the way the systems will have to be changed and everything, we'll have to see whether that deadline given by the RBI is maintained, or there is some extension which happens. But as of the moment, we have not quantified it.
Okay. And sir, if you can provide the breakup of customer base in terms of how many of your customers haven't seen any change in EMI, also have only seen increase in tenure since the rates have been increasing, and say how much percentage of customer have seen say 10% increase of EMI?
I don't have it right now, but we can probably look at it and provide it. Right? Okay. I don't have it offhand. I don't have the rate, the data available.
Okay. And is there any change in the customer behavior post the RBI guidelines that whether the customers are actively asking for increasing EMI or increasing tenure. Is there any change in customer behavior?
See, by default, we opt for as per the loan agreement, it is a change in tenure. Because for the customer, it is kind of an inconvenience if they have to keep on changing the EMIs. They would not have an idea as to how much to provide for in their cash flows. So that is something which is generally accepted in the market. And only in the event where, the tenure crosses that limit of 30 years or 70 age cap that we have, or if, this results in a negative amortization, that is when we go for a EMI change. The number of customers who opt for a change in EMI is not a very large number. I wouldn't say it is even in the lower single digits.
Got it, sir. Yeah. Thank you and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Dipanshu Suman from Vriddhi Capital. Please go ahead.
Hi, sir. Congratulations on good numbers. So I just wanted to understand on the cost to income ratio. So right now we are at 16.25. So for coming 2-3 years with initiatives on branch opening as well as on the digital side, how do we try to model this?
See, branch expansion, we have planned for, just 15-20 branches every year. And, most of our branches, in fact, all our branches are on a, OPEX model where we just have a lease rentals and, registration and all those things. So it's not a very large cost. So that will not be a major impact. However, we have a IT transformation which is planned. That will have an impact in the coming years, at least for the next 2 years. We feel, this could be slightly elevated and go up to about 18%, 18.5% in the coming 2 years. But beyond that, as the size increases, the book size increases, this would probably get absorbed and again start coming down. But in the next 2 years, that is the current and the next year, probably this could be slightly elevated because of the IT transformation more than anything else.
Okay, sir. So most of the other points already you have clarified, but just wanted to understand from you, what are the levers what we have on the ROA side? So right now, as you said, we are at 2.2 for this quarter, excluding the exceptionals. So how do we try to see that we can be at 2.2, 2.3 over a longer period of time? Say, for example, 3 years, kind of.
See, I would love to have a ROA of 2.2, 2.3, but as the size increases, as we also are moving into the slightly higher ticket size loans, I think we'll have to be a little more we'll have to understand that this probably could rather come down rather than go up to 2.3 and 2.4. So I mean, if you have to factor it into your projections, I would say a figure of 2% in the longer run would be a little more appropriate rather than looking for an increase in the ROA rather of 2.3 or 2.4 from the current level. That will be a little more realistic, I would say, rather than going for a higher ROA. Because as we move in the ticket size, we have to be a little more competitive, and we may have to, offer some better rates, which will impact our spreads, which will impact our some offers, special offers, and all those things will have to be offered. So that would, do it. But we would be more comfortable with about 2%, and we would like to maintain at 2 and not go below that.
Okay. So, got it, sir. But do we have something in mind from the product segment basis? Say, for example, builder side or say on the loan against property side, and the product mix which can help us to be at say 2.1, 2.2 kind of?
See, we do have certain options in the sense that we have a very low percentage of business in the LAP segment. We don't offer these products like, LRD, or we don't have these structured loans or things like that. And we don't practically have minimal or nil, I would say, loans in the commercial segment. Okay? Yes. So those options are always available along with the construction finance also, which is offered by many other players. So, I mean, if at all there is a conducive environment and we are in a position, we may look at it at a later date, but not as of the moment. I think we are comfortable with the pure home loan segment, self-construction or purchase cases. And, even within that, we have a good, healthy, mix of salary to self-employed of 72 to 28. So I think, if we are able to operate in the same segment, we would like to maintain it as far as possible. But yes, there are a few levers available which we are not looking at as of the moment.
Okay, sir. So right now you have already been for almost 6 months. So any opportunity or low hanging fruits which you see in which can help us out in the shorter term, from the growth perspective, any other low hanging fruit what you would have observed or any of the key observation which is bothering you? So both on both sides, of one on the opportunity side and one on the concern side. So any key concerns what you feel?
Well, I guess I've articulated this quite often, but just for the sake, I'll just mention. See, one of the opportunities is, on the IT front, we have embarked on an IT transformation, and that has been actually long overdue. So once that happens, that's going to help in our, in terms of additional, obviously, a latest state-of-the-art kind of a technology platform will help us in better analytics, will help us in better, better CRM and all those things. So that will definitely be a positive which we can look forward to. We have already embarked on that IT transformation project. The second, of course, was that, it was a single sourcing channel on which we were dependent upon. And we have tried to diversify that and add a couple of more channels, which is the APF as well as this digital onboarding and digital sourcing. So this is another positive, I would say. In terms of the negatives, of course, it's clear that if we have to move to the slightly higher ticket size, we will have to compromise and be open to a little in terms of our spread and NIMs. So that is the main course. We already had, in the beginning when I joined it, obviously there was this concern about this restructured pool where, a majority of it has already come out. So I think by March, that particular part of our, that small, the gray area would also be very clear by the end of this financial year. So that also was one of the areas of concern, which now we are a little more clear as to where it is happening. And we are taking corrective steps on that as well.
Great, sir. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Gaurav Jani from Prabhudas Lilladher. Please go ahead.
Thank you, sir, for taking my question. A couple of bookkeeping questions first. Can you quantify the investment income in Q2 and Q1? I think it was...
Sorry, can I just repeat it? What is that?
Can you quantify the investment income, please, for Q2 and Q1?
Investment income you're asking about?
That's correct, sir.
The investment income for this quarter is 31 crores. And for last quarter also, it was the same number, 31 crores.
Okay. Thanks for that. So secondly, wanted to clarify on, the entire movement of the provisions and the PCR. So what I understand is this quarter, about 64 crores has slipped from the restructure to the NPA, right?
Not in this quarter, but yes, we have had, we started off with 174 point something crore as of March, and today we are at 254 crores. So
broadly 26 and 54, 80.
Yeah. In this quarter. Yeah, you're right. 64 in this quarter and 20 something in that previous quarter. You're right. Correct.
Correct. So which means, sir, where I'm coming from is NPA provisions were about 16 odd crores. So I believe those were total write-offs, right? I mean, because last quarter there was again a restructured slippage to NPA of about 17 crore. I believe that is completely written off this quarter because the PCR has come off.
No, there is no write-off. It is a NPA portfolio. The efforts for recovery continue. It is not a write-off. They are NPAs. So they are accounts where, the payment is not coming, but the asset is there, the customer is there, and so the recovery efforts will continue, and the provisioning will also continue as per the requirement of the ECL model. Whatever is required, we'll be continuing it. And normally, if once an account goes into an NPA, we as per the ECL model, we have, considered, or our past record shows that the repayment happens in 5 years. So there is a 5-year period in which the account comes to a closure. Either it gets regularized or some of them will remain in an NPA for a longer duration and all. So earlier also, if you look at it, the IGAP requirements, it was 15, 25, 40 and 100, wherein it was going up to beyond 5 years also. So that was the thing. But in case of ECL, when the consideration is purely based on the statistical data, so our track record shows that on an average it doesn't go beyond 5 years, and the account gets closed, or either which ways, maybe with a little bit of a one-time settlement or a small waivers or something, or with a full recovery. So that's the kind of thing. So these accounts of 18 point something, which became an NPA from the restructured put in Q1, they are part of that 64 crore which are an NPA as on the end of the second quarter. And they will be they have been considered in the stage 3 assets for the purpose of our ECL calculation.
Sure. So, sir, basically, last 2 quarters we've seen a decline in PCR. So what you're alluding to is that's basic, that's largely because of the slippage from the restructure to the NPA, and that initially would obviously entail lower provisioning.
Correct. That is true.
Understood. Sir, lastly, in terms of, again, harping on this point of disbursals for the second half, right? So what I understand is, most of the processes would have been implemented by September end?
Yes, if you see the presentation, yes, most of it in terms of the centralized disbursement, lead sourcing, pilot project, reconciliation, CRM, all those things, yes, we have implemented. By the end of by September, yes. Most of them are operational from 1st October or something like that, yes.
Correct. Which means that October would be a normal month, right?
Yes, we should look at October as a month, except that it has too many holidays. But other than that, yes, it would be a normal month where Diwali falls. Dussehra and this falls, sorry.
Correct. So till date, sir, could you quantify, the amount of disbursements that you would have done? Or, what sort of number are we looking at in terms of October?
So as we said, we are looking at a 10,000 crore disbursement by the end of the year. So we should be doing about 3,000, and that is what we are pushing for in this quarter.
Correct, which translates to about 1,000 per month, so which is what I was getting at.
Yeah. So that's the kind of a thing. We have given a targets accordingly only, and we are pushing for that.
Understood. That is it from my side. Thank you for answering my questions.
Yeah.
Thank you. So the next question is from Akshat Haria from Multi-Act PMS. Please go ahead.
Hello, this is Darshan Shah from Multi-Act. I just have one question. Can you please share BT out number for the Q1 and Q2 of this year?
See, we have a total amount of portfolio which is inclusive of the amortization. I can probably separate it and give it to you. But in Q1, the total amount of amortization plus prepayment put together was 105. Q1. Q1 was 1025 crores, and this quarter it is 1165 crores.
Okay, thanks.
Yeah.
Thank you. The next question is from the line of Arvindar from Sundaram Alternates. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So, I would like to understand, so this APF loans, would it be only residential, an individual, home loans, or will it also include commercial loans? That is my first question. And so, since the ticket sizes in APF loans is much higher, about 25 lakhs, it could even be in the range of 30, 40, even 50 lakhs. I mean, like, can it not, up the growth potential for the company itself, like from 18 to even 20-21%, something like that? And another question I would like to understand, I mean, like another query I would have is the interest rate sensitivity. So, like, let's say, like if there is a 100 basis rate cut, like in next year, like, how can it, show up in the yields or cost of funding?
Yeah. So first of all, your part about this APF, whether it also is commercial, no, we are only doing residential loans presently in the APF project. So if it is a kind of a loan with shops plus houses, we would be targeting the houses or the flats in the particular scheme for our APF projects. That is one, because as I said, we have a minimal to almost nil kind of a portfolio in the commercial segment as of the moment. So that's what is the first point. The second point is as regards the disbursement in the APF, yes, we are also expecting the average ticket size to be in the range of 35 to 40 lakhs for the loans that we give in the APF segment. So that is one of the key factors why we are confident that we should be able to, achieve this kind of 18%, 20% growth in loan, 18% loan book growth, and achieve about 1,000 crores in the disbursements. And third, as regards your stress testing the interest rate sensitivity calculations, we have, 3 levels of testing that we do for our, in a stress testing. And we have a scenario where even up to 1%, if there is a hike or a change in the interest rates, we do factor in and consider as to what would be the impact in terms of our, interest rate sensitivity. We do factor in, and whether we are adequately capitalized and whether we are, how much it would impact in terms of the profit is being monitored. And we are, even monitoring the kind of limits that the board has set the limits for what kind of variation is acceptable and at what will be the breach limit. So we are not reaching we will not be crossing those, breaching those limits that have been laid down by the board, even with a 1% variation in the interest rate, either way.
Oh, so you are saying like there won't be much impact on the spreads or margins because of the...
No, I'm not saying there would not be an impact. I'm saying that, we do have this stress testing mechanism wherein we are doing 3 levels of, mild, medium and high kind of 3 levels of stress testing done. One of the factors is wherein in case of the interest rate sensitivity, we do consider up to a 1% high or a drop in interest rates, either which way, depending on the, how much fixed rate and variable rate you have on the asset and liability side, it could go either way. The board has set the limits in terms of how much of variation in terms of the profit is acceptable. So there could be some impact or negative impact also in case of the interest rates, but they are within the limits that have been set. So we are quite comfortable within that. And these obviously are conservative limits which have been set by the board.
Okay, sir. Just one thing on APF, like that ticket sizes are higher, and we are entering more and more into the banks, and territory of customer segments. What kind of things would we be like, little more relaxed in terms of, say in terms of selecting the customers? I would try to understand, sir, in comparison to the banks.
Well, this segment of, APF that we are targeting, we have, first of all, we are, trying to work with the Cat B and Cat C developers. Because obviously Cat A developers would mean they would be very, very competitive. They would have much more, attractive options available to them. So matching them would be a, huge compromise for us also. So in terms of that, we are looking at a Cat B, Cat C kind of developers where the project sizes are slightly smaller, right up to not more than 100-150 units in a particular project. And we are also, aware that, we will not be able to look at the very high end of the segment, that is 4 BHK or, very, very luxurious kind of apartments and things like that. So we are more concentrating in terms of our APF, in terms of our, 2 BHK and 3 BHK segment, which normally would be in the range of about, 25 lakhs to about 1 crore. That is the segment that we are operating in. So, if it were to be a property of 2 crores flats, which are each costing 2 crores, probably we may not be touching those kind of properties for our APF segment.
Sure. Thank you.
Thank you. The next question is from the line of Abhijit Tibrawal from Motilal Oswal. Please go ahead.
Yeah, good evening. Thank you for taking my question. So you have answered most of the questions that I'm about to ask, but asking them again just for better understanding. So, I mean, lot many people today asked what led to slightly muted disbursements. You explained it by saying that somewhere towards the end of July, we came across frauds in the Ambala branch. But so when we kind of look at or when we kind of speak to your peer set, there is the definite acknowledgement of a demand slowdown that you also talked about in slightly lower ticket sizes, I would say 15 lakh to 25 lakhs, probably an outcome of the withdrawal of the CLSS subsidy. So for you in particular, disbursements slightly lower than maybe even your expectations, was predominantly because of the distraction which was there, because of frauds which were unaided, subsequent process fixing, employee training, branch trainings, or would you attribute it to weaker demand? And so a related question here, is the demand genuinely weak, or is it that a particular bank or an NBFC is overly aggressive in mortgages and which is kind of leading to weaker demand environment for the other players?
In terms of the first question, is it because of this, the incident and the repercussions that we had? I would say it was because of that only, because in spite of all these things also, we have seen a increase in our business in the 25 to 50 and above 50 lakh segment in Q2 compared to Q1. And in terms of our project launches, in terms of our, the kind of demand, particularly in that segment, we are definitely seeing that it is continuing. There is no slowdown in that segment. But you rightly pointed out in the smaller segment, which I also earlier mentioned, that post-CLSS withdrawal, there could be some kind of a pressure in the smaller ticket size or affordable segment, because supply has always been an issue. But for the CLSS, which was a very good incentive for the people to enter that segment. So that is definitely there. But in the segment where we are having a ticket size of 22 lakhs and we are looking at, APF where we are targeting 25 to 1 crore kind of a projects. So there definitely the demand is continuing and we don't see too much of a slackness. Okay. Second, as regards, players, whether somebody is becoming too aggressive, no, I think, overall everybody is trying to, operate in their own comfort zones and areas, and is trying to be as aggressive within the limits that are possible. So there is no single player who is becoming any great competition or anything of that sort. But having said that, I would probably say that yes, some of the players have slightly come down in terms of the ticket sizes. Like probably, the competition phase of the competition has almost remained the same, except probably a couple of NBFCs who have entered the market. That's about it.
Okay, sir. So the second question that I had was on NIMs. Again, you commented extensively on that to spur growth, we are okay compromising margins and spread as long as they remain above your guidance of 2.5% spreads and 3.5% margins. So the way I look at it, third quarter, you have a couple of levers. Like you said, almost 6,500 crores kind of got repriced in the second quarter. The full benefit of that you will get in the third quarter. Another 6,000 crores will probably get repriced in the third quarter. The full benefit of that you will get in the fourth quarter. But having said that, like you said, in the festive period, you are offering loans below 9% for new customers. For the existing customers, it's 9.6%. At the same time, because you will be working under APF developer tie-ups to spur growth in higher ticket sizes, quite naturally you need to be aggressive because you will be competing with banks in those ticket sizes. But net, is it right to conclude that from here on, versus what you reported in 2Q, we should see margins moderate, and which will also aid your disbursements? Like you said, you're targeting almost 3,000 crores each in 3Q and 4Q.
No, your reading is right that we do have certain levers and we do have certain, areas like absolutely rightly pointed out that this rate hike is yet to have the full impact. And so there would be, on a steady state basis, if we had not changed gears or if we had not changed the segment, probably we would have seen a uptick in the spread and margin. But we would like to enter the new segment, and this is a good time where we can use this buffer to offset that thing and enter the new market. So we will, going forward, you can see that probably 2.6 might either remain and or might come down. But we would not want to go below 2.5 in terms of spread.
Got it, sir. Sir, thank you. And last question is, this quarter, the effective tax rate was lower at, I think, 20%. What was the reason for the lower effective tax rate?
See, our tax rate in Q1 was around 22%. But this time, because of this impact of this Ambala, provision that we have taken, there's a deferred tax asset also, which is to the tune of about 10 and 13 crores. So because of that, the effective tax rate for this quarter is a little lower. But otherwise, if you were to kind of project it into your figures, probably you could continue it as a 22% because this is a one-time impact for this quarter.
Got it, sir. So for the full year, it still remains at 22%, is it?
Yeah, 22 net of this 13 crores, which we will have to continue in terms of the deferred tax in this year.
Got it. Great, sir. Thank you so much. And wish you and your team the very best.
Thank you.
Thank you. The next question is from the line of Jigar Jani from B&K Securities. Please go ahead.
Yeah, hi. Thanks for taking my question. So just a couple of them. One, on the APF side, any particular targets you have probably out of the 6,000 crores, how much disbursement you're targeting this year in second half from the APF side? And for next year, especially given that this is likely to be a one major growth lever that is likely to come in out of, say, 12,000 odd crores of disbursements that we are targeting next year. How much are we kind of internally targeting from the APF segment? That's one. And secondly, on the OPEX front, on the IT infrastructure, I think we had guided for 60 crores of OPEX in the IT systems spread over 2 years. So just want to understand how much we have spent in the first half and how much is spending to be taken in FY24 in the second half. Thank you. Hello?
Hello. Yeah, sorry. The first, on your APF question, we don't have a specific amount-based target for the current year, as I had mentioned earlier. However, we have kind of said that ourselves a target that we should try for about 350 or to 400 kind of projects to be approved during the current year. Now, obviously, these project approvals happen at a very nascent stage when the kind of project is just getting launched. So actual disbursements and all for these projects also will come at a lag. That's why for the current year, we will get some benefit, but we have not quantified it. Having said that, going forward, we have said that 20% of our business should come from this segment of APF. Currently, we have 80% plus coming only through the DSA channel, and we would like to, in the 2 to 3 year kind of a horizon, we would like to see it come down to about 60%, 20% coming from our APF segment, some 10% coming from our digital sourcing and channel, and whatever remaining 10% would be from our walk-ins and existing customers coming for repeat loans and things like that.
Okay, thanks. And on the OPEX for IT?
Hello?
Yeah, on the OPEX for IT infrastructure, which was about...
I missed that point. See, on the OPEX, we have not actually spent anything in the current year except for, because we have still not finalized the vendor. The vendor we have mentioned in our presentation also is likely to be the system integrator, RSI, is likely to be finalized in this this particular month. October we are expecting, October or by mid-November. So the expenses have not been have not come into the so far in this current year. But once the SI is implemented, then the expenses will start. That's why while we have projected that it could go up to around 18.5%, as of now it is still only 16.25% in terms of the cost to income ratio.
Okay, so probably in the second half is what we are seeing some impact. Yeah. Okay. Thanks a lot for answering my question and best of luck. Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah. Thank you, Nitesh. Thank you to all the participants for taking out the time and for all the questions. I hope we've been able to answer all the questions, and if at all there are any queries that are left out, you are we are most welcome to get in touch with us. Thank you once again for taking the time and for hearing us out. Thank you.
Thank you so much. On behalf of Investec Capital Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.